Hello traders, this is Fawad Razak, market analyst for City Index. Today is the 23rd of October. So the markets are still contained in tight ranges as this week has been quiet, and that has allowed investors to start focusing on the upcoming US election. And we are finally seeing some weakness creep into the market, as you can see on this daily chart of the S&P 500. It has now broken or trying to break this bullish trend line that has been in place since the markets bottomed out in September. This is a short-term trend line, obviously, but the longer-term trend is clearly bullish still. And so even if we do get a small pullback, this will not necessarily be the end of the bullish trend. But in the short term, we could well see some weakness as we near the US elections if some key support levels give way. The first area of support is shaded in green around 5,827 on the S&P 500. This level was previously support and marks the trend of this rising wedge pattern. So this level is also the 127.2% extension of the last downward swing from July to August. And so if we go below this area now, then that could potentially pave the way for a drop to the next level of support at 5,773-ish, this blue line here, which is also where we have the 21-day exponential moving average converging with prior resistance. Below that, this area right here at around 5,670 to 5,700 is the next big area of support. That area is now the line in the sand for me insofar as the short-term technical outlook is concerned on this market. If we were to break below that area at some point, then we'll have had our first major lower low in place. And at that point, the probability of a deeper correction will be more likely. But let's not get ahead of ourselves. And first things first, let's keep an eye on this green shaded area, which could still hold because we haven't seen any bearish moves yet. So that's the first area of support to keep an eye on. Moving on to the German DAX index, and we are looking at a similar picture with the index printing higher highs and higher lows. But it too has lost some bullish momentum in recent days, although it has bounced off its lows, finding support from this trend line. And that trend line is kind of the line in the sand insofar as the short term is concerned. Should we post a daily close below this trend line, then at that point I'd expect to see some selling pressure come into the market with the likelihood of the index returning to this blue shaded area where it had previously found a strong resistance back in May and a couple of times in September as well before it broke out. Mind you, that area has already been tested, so should it break through that area now, then that could be a bearish development, which is something that could happen given that we have a weakening Chinese economy, we have earnings coming up from major companies, and not to mention the presidential election in the US, all could trigger some volatility. But first things first, let's wait for a bearish trigger, and for me that would be the break of this bullish trend line on the DAX index. There's some interesting price action on the gold chart today, which has lost its earlier advance after hitting a fresh record high. This comes on the back of rising bond yields and further strength in the US dollar. Now, despite those factors, gold has been pushing higher, but it is now finding some resistance. And could it be the top in gold? Well, so far we haven't seen a confirmation yet, but if you look at the long-term charts, like the monthly, it has been going in one direction, which has been up, obviously. But the RSI rising to 80 or 85 even is quite significant. And if and when we do see a reversal stick on the daily or lower time frames, then we could see the onset of a sharp correction, similar perhaps to what we saw back in August of 2020 when the RSI was at extreme overbought levels. That preceded several months of weakening prices and consolidation that lasted for well over 3 years before gold broke out. Now, looking at gold prices on the hourly chart, you can see that it is testing this bullish trend line that has been in place since it started the current phase of the rally on the October 10th, and it's trying to break below that, having created already a lower low, as you can see over here. So it could be that gold has potentially turned around, but I think we need to see a daily close for confirmation. So this level is now going to be resistance insofar as the short term is concerned. For as long as it remains below that level, the path of least resistance on the lower time frames remains to the downside. But if it goes back above it, then that could be yet another sign that this latest bearish move has failed, because right now it is testing support around this level right here, which was the previous resistance level that gave way, leading to a sharp move up. So it's possible that we could see a potential bounce around this area, particularly because of that bullish trend line also converging there. So any move on a daily closing basis below this area is what I'm looking for, because then we'll have a clear lower low in place on gold. And until that happens, any intraday swings like we've seen today should be taken with a pinch of salt. Now, for more market analysis and insights, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.